Great to follow Benny and David. Really excited for what's kind of coming down the pipeline. We've got a lot of crossover here, so I really appreciate learning quite a bit from those presentations. Poseidon asked me to kind of cover three things. One is just on-chain versus off-chain indexing. Obviously, we are indexer. We'll get into like what indexing entails, kind of why it's a problem set and where we see it going. But we'll talk about specifically off-chain versus on-chain data. I'll just talk briefly about the vision of Indexer. Obviously, this is an Indexer presentation, but I think we have some interesting insights on where the market may go long-term and why we're really committed to this project. And then lastly, just a few trends that we're seeing, high-level market data, and then a very specific problem, I think, as Outliers fund, just as a venture capital arm, kind of specific problem set that I think is a pain for a lot of companies that y'all should kind of go after and search for people who are trying to solve that problem, because there's a big opportunity. To kick this off though, Indexer, we power applications at scale with a standardized data layer for on-chain liquidity. And really when you think about Indexer, that's what we're doing. We're aggregating liquidity across every chain. We've started with NFTs historically, also we'll be going into fungible tokens in the future. But that's what we're doing. So if you can just imagine like a worldwide order book for every asset, that's what we're building. But first, I'm just going to break down like on-chain versus off-chain. These are probably buzzwords everybody's heard a little bit. Everybody wants you to have off-chain data inside your on-chain indexer, but we'll just break this down. There's actually a lot of off-chain data, even inside Web3 companies, not just in traditional Web2 companies. Just high-level definitions. Typically, off-chain data is proprietary in nature, right? So it's owned and managed by private entities. It's not publicly available on the blockchain. So you're going to have some type of token getting access. You can't get all the information. And then, it's controlled access. So enhances privacy and data protection. But just a few examples of this is, user data is on websites. Obviously, if you could see the way users are using Amazon, that would be extremely valuable data. Or like if you're a vendor to Walmart, we're in Bentonville, Arkansas, right? If you're a vendor, you get access to in-store data analytics. That would be proprietary data, off-chain data. Asset listings and centralized databases. You can even think about this as asset listings inside centralized exchanges. So think Binance, think Coinbase, etc. You need to get access to their data feeds if you want to see kind of the order books that are going on there. You also have data on side chains and private blockchains. You have centralized application data and then communication platform data. Specifically, Discord and Telegram would kind of be the main two use cases inside Web3. To not leave this as super broad, if you can incorporate off-chain data into on-chain data, those data sets become very valuable. One, because you're looking at data sets that everybody doesn't have access to. A really good example of this is actually SoRare. So SoRare is one of the biggest Web3 games, but the SoRare data is happening inside a private sidechain. And so you need to go to SoRare, you need to get access to those API keys to be able to trade inside their marketplaces and get access to that deal flow. But if you do get access, and I think there's only one company right now that has access to SoRare data in that way, we are working to be that second company. It unlocks a ton of value because basically other companies don't have access to the actual order flow, because most of every action happening inside SoRare, including their trades, is all happening inside of a sidechain that's not publicly available. Now, most indexing, when we think indexing, is on-chain data, right? So this is everything from it's public in nature, so it's stored directly on the blockchain. It's publicly accessible and transparent. It's immutable. So every transaction is immutable, so provides a tamper-proof record. It's generated through transactions. So when a user signs a transaction with their wallet, that data is going to go on chain and it's recorded forever, hopefully, as long as the blockchain doesn't go down. And then you can index that data. So cryptocurrency transactions, smart contract transactions, NFT ownership and transfers, decentralized application, usage data, blockchain-based voting and governance, you think of it DAO. All of that stuff is on-chain. Now, Indexer specifically, we really focus on-chain data at first, but we've been able to build up some really nice proprietary off-chain data sets. especially around Discord. We have around 700,000 users using our Discord notification systems. So we're tying, Discord wallets to on-chain transactions all the time across all the users' wallets, across all of their chains. We're working with SoRare as well to get access to their API keys and be one of the only vendors that are serving those marketplace transactions. But I just want to talk real briefly about Indexer. A lot of people have noticed over the last 2 years, NFT transaction volume has been decreasing, but there's a really bright future ahead, especially for assets. So our vision has kind of always been to build an interface to the world's assets, meaning the next time you buy a car, this is further out, but maybe it's a 1957 vintage Ford Mustang, you should be able to do a global lookup on every car still in existence. So you should be able to see all listings, prices over time, filter and sort and analyze historical data based on condition, mile, and service history. So if you can just think of any asset that you're going to store to buy, or you're buying a new house, you're buying a car, you should be able to do a global lookup and get all that information. So maybe you don't find the exact condition, miles, price you want. So you put in a collection offer to all 1957 Ford Mustang owners saying, you know what, I'd pay 38 grand for a good condition Mustang with a stellar service history that's under 150K miles. And anyone in the world could look up and match that offer. But imagine running that same scenario across every asset, good, and service. There are millions of distinct and disaggregated markets all over the world that need to be indexed and connected via intuitive routing layers such that we can actually move goods from market A to market B to user C. Now, blockchain ecosystems are not quite mature enough to usher in the world's assets, goods, and services for truly open, no black box markets, but the underlying tech is there. And there are plenty of assets and services through NFTs in the form of PFPs, games, art, collectibles to work with. They were already building the infrastructure needed to support the long tail of real world asset use cases. So that was a lot. So let me pause and take a breath and just summarize what we just talked about. What Indexer is doing and why we're super bullish over the next 5 to 10 years is the tech infrastructure that we are building today will support all future use cases of assets represented in a digital form. So the routing layers we are building today will be used to connect and route orders through all markets in the future. So the past year, since Outliers has invested in us, has been laying the foundation by building blockchain and asset agnostic indexing and routing infrastructure, such that today you can view every digital asset across our supported blockchains. You can slice, dice, sort, and filter every conceivable asset. And there's tens of millions of assets, and then route those orders through one global interface. So what you're looking at right now is share my screen. This is just Indexer. We're just looking at basically every NFT, so every digital asset across 4 blockchains: Stacks, Near, Aptos, and Sui. These are 4 very different blockchains running on different blockchain architectures. And we're tracking tens of millions of assets, all their orders, any asset that gets created on chain, you can view, you can analyze it, you can see who owns it, you can put an offer on it, and you can route orders through probably 30 marketplaces at the moment. So I just want to get into kind of what we're building, just brief demo of why this is important, why this is a real pain for a lot of people building on blockchains, and why this is kind of a core constraint that we're trying to unlock. So universal asset liquidity layer across blockchains and smart contracts is what Indexer is building. You really need a standard and performant way to access historical and aggregated liquidity. Right now, if you think, okay, Josh, data is all on chain, it should be very easy to query. Well, it's not. Different blockchains have different architectures, different smart contracts have different ways of representing data. They have different ways of representing assets. And just to give an example here, this is what a transaction looks like on Sui. This is what a transaction looks like on Stacks. Obviously, it's not very user-friendly. This is what a transaction looks like on Aptos, and this is what a transaction looks on Near. You have very different data standards. And what we do for developers is we create a standard data layer. That way you can query across multiple blockchains at one time. So for example, let's just say that we want to get We want to look at every action that's happening on Aptos right now. So let's do a limit so we can see it. Actually, let's do a limit of 2. We're going to get type. We're just going to fill in a bunch of data here. Hit play. So this is for Aptos. I can copy this exact query. I can change it to SWE. I can change it to stacks. I can change it to near. And so what we have is we've taken 4 very different standards and we've unified that data into like one standard interface. So what that allows you to do is you can build marketplaces Tradeport, which has marketplace listings across multiple blockchains. Drop into fuddies. This is all running on top of Indexer. We could sweep the floor across multiple marketplaces. So there's some assets listed on Tradeport, some assets listed on Clutchy. There's some listed on Hyperspace and Blue Move. So we're interacting with 4 contracts inside one contract call. And many more things. Like we can jump into users, we can see activity, profit loss, value over time. That's what we're really focused on. So we power everything from wallets to marketplaces to automated trading tools. And we've been really focusing on gaming infrastructure lately, which is one of the reasons we're doing this talk, specifically around asset creation, allowing games to track their assets as they get locked up into 50 different third-party smart contracts, whether they're staking or marketplaces, etc. That way they can really see kind of the user journey and keep track of their IP, even though as it kind of decentralized, that's not a word, but moves across multiple smart contracts on chain, they can see everything that's going on and get a really rich understanding of how their users are interacting with their applications. A couple trends that we're seeing, obviously we've been in a bear market for almost 2 years now. So basically the day that Indexer started as a company, it was like Pico of the market. But we are seeing some very promising things come in. Obviously, we've had a lot of the worst things happen over the last year. So FTX, all the major funds going bust. But we've had a lot of wins in the last 3 months. One, Coinbase winning with the SEC, Ripple winning with the SEC. And that's really, I think, given a solid floor to the market. So we just look at monthly NFT volumes. We've basically been on a downtrend. But we did hit bottom in September, and this is the first 2 upticks that we've seen in an extremely long time. So that's promising. So this is based on NFT volumes. Monthly NFT transactions still haven't really bottomed out. Volume, I would predict, is probably a leading indicator. Transactions should spike as asset prices start to go up again. Obviously, it's kind of a very follower market. And same thing with monthly NFT users. This is, really important to look at for a couple of different reasons. The NFT market, even though it's doing extraordinary volume, is not a lot of users. You're looking at 1.5 million. We're all the way down below 500,000 unique users across blockchains. So it's still a very small space with a lot of room for expansion. We're looking at numbers that are kind of very low in comparison to just general Web2 consumer apps. And we're talking about the entire blockchain space. But it does feel like we've hit kind of a market bottom here. We're starting to trend up, and it feels like we're moving back into moving out of the bear market. My very last point, and just kind of details, but Outliers fund, I think this is a real problem set just inside the market, is payments in general, but especially payments in gaming, are really, really broken. So we just think about users. Typically, when you're talking to a main Web3 user, they're going to have a significant portion of their assets inside one blockchain, so within one token standard. So if you came up in ETH, say you're 2018, 2019, probably most of your assets are inside ETH. You may have dabbled in Solana, maybe you've dabbled in Sui, maybe you've dabbled in Aptos, but the main chunk of your wealth is going to be in ETH, or a main chunk of it's in Solana, or a main chunk of it is in some of these other blockchains. And what that means is when, especially when users are looking at games inside ecosystems to play, they're much more likely to play games inside their ecosystems because there's a ton of friction right now to move your assets around. So if you want to convert, say, ETH to Solana or ETH to SUI, you're going to have to go through probably a centralized exchange, convert those assets, send them back out. And the friction is just kind of too great. Users aren't going to convert. There's a lot of reasons why payments are hard. One, you have a super fragmented ecosystem. So crypto payments and an ecosystem of products, they just don't really work together. We do talk about Web3 being composable. It is kind of composable, but the dirty secret, as you talk to developers inside the space, it's really, really hard to move assets around, especially across different blockchains. There's no off-the-shelf smart contract support. This is one of the things that Benny was talking about just in general, but crypto payments don't end with settlement. Businesses need blockchain support. So if you're talking to like AAA Web2 gaming companies and you want to move them to Web3, there's a lot of support that's needed on just on-ramping them into kind of blockchain ecosystems. Things just work very differently. You're not dealing with just like Stripe payments or, you know, your banking credentials. That stuff's not solved here. There's a lot of custodial services. So again, if you're bridging across assets, you're typically going through like a Binance, or you are going to FTX, or you're going to Coinbase to kind of store all your general assets. One of the big pain points that I think will unlock, one, the ability for a lot of users to transition into Web3 is if you're a vendor, say you're a marketplace or you want to sell a car online or sell a car through blockchains, or you're a Web2 game, you really want your users to be able to spend money in whatever token they want. So if they want to pay in ETH, they should be able to pay on ETH, even if you're on Solana. If you're on Solana, you want them to pay with Bitcoin or ETH or SUI or whatever. And then you also want them to be able to pay with their credit card. So if the user is just now onboarding into Web3, they should be able to just log in, give you their Amex card, give you their Visa card, pay for it. You get paid in crypto, you get paid in whatever. I think this is a huge pain point. It would solve a lot of issues inside marketplaces, inside games specifically, just onboarding users, make that as seamless as possible. But it's a really hard problem. And I think that's something to keep your eye out for as you're looking for like just investment opportunities. Whoever solves this problem and is able to kind of integrate all these pieces, I think is going to be a very valuable company and will make kind of all the portfolio companies' lives a lot easier. So I think this is one, there's a big problem out there that I would keep your eyes open for. And thank you guys. That's all I got for today.